Hi guys, thanks for tuning in to another episode of Nuggets News. Well, it's Sunday again. We've got so much macro news to get through, as well as all the crypto headlines. These days, there's so much overlap, it blends all together, so I do encourage you to watch the full episode. We do welcome another 1,000 new subscribers this week. A couple of my favorite episodes already. For the year. I know we're only just into it, but these two were absolute crackers. So Gods Unchained, an interview there with Robbie, but he's also part of Immutable X, which is one of the leading scaling solutions for Ethereum. They're taking on board projects at the moment and giving out grants as well. So we'll talk about that and my predictions, my price forecast. And this was a long video. It detailed everything you need to know. If you've got friends and family thinking about getting into Bitcoin, this is probably the one to show them. It's all time-stamped, plenty of slides, all that info from start to finish about why Bitcoin is going well into six figures and beyond, in my opinion. All right, I do just want to give a shout out to our new members who are exploring the platform. These days, guys, it's all instant and automated. If you want to dive in and check out all our research, check out all the different tiers of the memberships and what they offer. Even the words, I know there's plenty of words people get confused, or what does that mean? Every day we are adding to every single section here, making it more streamlined and better for you guys, as well as all the free stuff there for beginners in the Knowledge Center still. If you do want to join the group and the community that is still part of one of the tiers, or two of the tiers, I should say, are very, very popular, where we have a lot of the discussion throughout the day. But the research is definitely more organized on that new platform. And we've got so many features that we're going to be rolling out this year, which is very, very exciting. A couple of reminders. Everyone loves free crypto, and look, I haven't spoken about this one for a while, but we're happy to continue it. So $100 free Bitcoin if you sign up and use eToro. There's a couple of details. You've got to make a few trades, I think it is as well, to qualify, but very easy to do. I think hundreds of you guys have already done this. So there's a link below if you're planning on doing some investing or trading in stocks. They've got zero fees on all those US stocks and ETFs, gold and silver, those things that you guys love. $100 free Bitcoin. That link is down below, and $10 free Bitcoin with the Bamboo app. So this is one that I've used for the best part of a year now, I think, and I'm an advisor to the team. But this is just download off the Google Play or App Store. It rounds up your purchases, or you can choose to dollar cost average into Bitcoin, Ethereum, all those Ainsley gold and silver tokens as well. I think it's less than 60-second sign up. Your grandma can use it. Once you've signed up, there's a little promo code section. Just type Nugget and you'll get $10 free Bitcoin. So hey, why not sign up all the family and get everyone some Bitcoin there, get them started on their crypto investing journey. Alrighty, let's get into the local news, where unemployment actually fell in Australia. So probably what we're expecting as Melbourne, Victoria came out of lockdown, which is good to hear. But I think Australia and the central bank are pretty keen. The government are keen to take the foot off the pedal with those benefits, but the RBA are really worried about that. So as Shane Oliver says here, pretty impressive recovery. 89% of those jobs lost are now back, which is very, very good compared to a lot of other countries. But there's a few caveats here. That other 11%, which is still a lot of jobs, these are things like travel, that don't look to be coming back anytime soon as well. So very sharp recovery, but still a lot of challenges ahead. What we did see though, with the money that we put into housing, hey, no surprises, there was a huge uptake, nearly double what they thought initially from that scheme. So a lot of houses are being built. Is that going to lead to ghost towns like we saw in China? It's all well and good to build all this stuff, but if the population and the immigration isn't happening, maybe the demand isn't met. And this trend of moving to the country is no flash in a pan. So a lot of other countries as well have seen this. But in Australia, we've got so much wide open space. There's a lot of people that are taking advantage of this and very happy to work from home, choosing that lower stress way of life, even though the pay might not be as good, for example. But look, fixed interest rates may have reached rock bottom. We've heard this a lot of times over the years. They can't possibly go much lower, but I think that this is the first time when things are possibly changing in terms of the inflation outlook and what's happening now. And if that picks up, then rates will have to rise. So just be very careful. If you are getting a mortgage now and you're taking out that $1 million loan, can you afford to service it if rates went back up a couple of percent higher, which would still even be low by historic norms. So the RBA, they are talking out of both sides of their mouth, but sounding the alarm a little bit here, saying that house values could jump 30% over the next 3 years if borrowers believe that the rate cut is permanent. So just what I touched on there, this is the Aussie mindset. Property only ever goes up. And they're now warning about this. And hey, isn't it funny that psychology and sentiment can become that self-fulfilling prophecy? And now the RBA are actually viewing this as likely. They're not going to say this if they think it's very, very small chance of happening. 30%, so 1.3 million in Melbourne and Sydney. Are you going to be getting a 30% pay rise over the next 3 years? Absolutely not. Wages have been flat for 15 years now. It'll be at that stage at least. So this is the big disparity, that wealth inequality. Not only that, we've heard stories of banks pressuring these customers to make unrealistic repayments, big lump sums as all these deferrals roll off. So that fiscal cliff, as we're talking about. Now, we didn't get that extension. I know a lot of people were unhappy with Scott Morrison, but that goes back to what I was talking about with being very mindful of the budget. They're now pushing seniors to dig deeper into their super nest egg. So this, I know it worries a lot of the economists that I speak to and follow. The government are forcing individuals to go to their balance sheets. So whether it's their super, whatever, rather than other countries at the moment that are still very happy to give the stimulus checks to pick up the slack. All right, so between 1940 and 1970, the silent generation and baby boomers only had 5 to 8% of that household income in debt payments over the life of the mortgage. So young buyers today are forced to pay, much higher. We see here, very common to have 30%, 40%, even 50% in some cities. So almost a tenfold increase in the chunk of your wage that is going to pay off your home. Now, if you think about everything else, your quality of life, imagine having 40% more of your paycheck to go out and do things, have fun, go out with your friends, travel. I just think all this is, good on paper when house prices go up. If you own a home, it feels good, but I think it's just these second, third order effects that people just don't realize, stress, anxiety, other mental health, all these things tying together compared to that way of life where you just had, money wasn't a stress. You could live a very good lifestyle for very average wage only a decade or two ago. So New South Wales Premier cleared of all these breaches after shredding documents. So another one, leaders in Australia, double standards. If you or I did this, we'd be in a lot of trouble. But pass there. So the China trade rows cost Australia $3 billion in lost exports. We know that that's hit us pretty hard. China have turned over a bit of a new leaf in terms of that attitude with Biden at the helm. So whether or not that's going to happen in Australia if we get a new leader. But at the moment, Australia are trying to find other places and other partners. So Mexico for our barley is one. Forming new trade deals with UK, EU. Look, I think I've touched on this many times in the past where money, when these countries are in trouble, money talks louder than these sanctions. So China have been caught again importing, doctored and rebranded Venezuelan oil to avoid these sanctions. So we've seen Iran using Bitcoin, for example, to get around these sanctions. So everyone loves the US hegemony until they don't. And as soon as it's a matter of putting food on the table or getting oil and energy into your country, I think more and more of these countries are going to start turning on each other or just ignoring the rule makers. Argentina's central bank, suddenly they've got a shortage of dollars. We've spoken about this a lot, and it sparks fears of mass corporate credit defaults. So they can't get the dollars into the system. Maybe they need that thick shake theory, some more stable coins. A surge in bad debt, set to worsen India's shadow banking woes. So it's not just China and these other countries where we hear about the shadow banking system, where we don't really know all the US dollar denominated debts or other debts that aren't tallied up with the big banks. And this is massively a problem that blockchain can solve in terms of that ledger of who owes what. US government and asking Australia here to scrap these proposed laws to make Facebook, Google and others pay for news. So a real clash of the titans here. Australia aren't backing down. Google and Facebook have said, well, we'll just stop serving Aussie customers. This is going to set a precedent for other countries. So looking forward to seeing what happens there. And I guess I'm glad we finally got around to building our own platform, because this is the problem. And this is another thing that blockchain, the Ethereums of the world, where we can build a ledger that's controlled by the users, not the company or the individual or the government that can make a decision just to all of a sudden ruin everything for all of those users. Another example right here, the Pentagon have been pushing all these troves of warrantless phone location data to the powers that be. You will have control of your data once we have things on blockchains with the users in control. It won't be these companies. All right, so Biden's been busy reversing a lot of the changes made by Trump. We've seen the World Health Organization withdrawal plan reversed, delegation going over this week. So that is a big welcome change, I think, for most people. Dr. Fauci is saying that these new data is showing that the vaccines are less effective against some of these newer strains. And many countries now are saying that they've got this new strain, which appears to be worse. Having said that, in the US, we saw the biggest single day fall now. So just as the vaccines are running short in numbers and they're planning these huge rollouts, maybe we have started to see numbers drop in the worst of it in these places. Maybe there is a bit of herd immunity starting to play out, even though the testing probably hasn't been all that accurate. The EU is looking to implement this block-wide vaccine passport standard. So this is one that is going to make a lot of you very angry, I know, because this is the overreaching. What if the cases are dropping, and what if we do have herd immunity? Are they going to still enforce this stuff? And that's where people are going to get angry, I think, and take to the streets. In terms of monetary policy in Europe, they're looking to cap bond yields. So remember, as yields start to go up, that means the prices of bonds are going down. People are selling them, or there's too many and not enough buyers. So they don't want it to be called yield control. In Australia, it's funny that we went that way initially to try and control and target yields, but they didn't really have to act. They didn't really have to print a lot of money to keep yields down. But in these other countries, if you just start to say you're going to target a yield, well, that means you're going to, in theory, print as much money as you need to buy it all. As soon as everyone starts selling bonds, they know there's going to be a buyer at that price. You see how that works there. So the central banks, they hate that terminology and don't call it that, whatever. Again, it's pretty funny. It's all just a term. A strong run in the world reserve currency has pushed the euro down to $1.20. So the DXY index, the US dollar, had a pretty good bounce recently. That shook markets a little bit, but it has since rolled over again. That is one thing that you absolutely want to keep your eyes on. And whether or not the stimulus plan is looked upon as not as huge as it may have been and the dollar gets a bit of strength, or it's looking like there's going to be a lot of spending and huge twin deficits as far as the eye can see, and the US dollar continues to roll over, that gives us the next leg up in probably the stock market, gold, silver, Bitcoin, every asset out there. So even foreigners have poured into the SPX rally recently. They've purchased $60 billion of stocks. That's the highest 1 month ever. Also, a new 12-month record. That's crazy, $316 billion. So remember how we spoke about money flows to where it's treated best? And even when other countries are printing money, if the US is the best place to get a bit of a yield, or the best stock market, it's all just booming, then that's where money is being printed, flooding into the US, flooding into US financial markets. And that's where you see the price of everything rise. And all these other countries, like Europe, are saying, how come we can't stimulate our economy and get inflation? Well, hey, $60 billion is not in your economy. It's now in the US stock market. Bank of America warning that all this policy is fueling bubbles and Wall Street prices. Well, guess what? These have been the policy settings for decades and decades now. They've just run a bigger and bigger trade deficit with China. They've now become a smaller part of global trade in terms of percentage. So America are less significant than they need to be, but they've still got the world reserve currency. And now they're printing more of it than ever. So this is M2 here, 25% surge. I don't want to be paid back in something over 30 years where every year they're printing 25% more of it. That's why people, just don't want these bonds. And remember, when everyone starts selling these US bonds, yields go up. And that is the nightmare scenario for the central bankers. They don't want interest rates going up when the world is under crushing debt. When interest rates go up and people can't afford their debt, it's that big wave of defaults. So that's the rock and a hard place that they're in. The Fed's balance sheet, it's just becoming a bigger and bigger percentage of GDP. Central bank down here, single figure percentage of the economy. Now it's half of the economy is what the central bank is doing. People are just becoming more and more lazy, and they've got this lifestyle, this way of life, standard of living that's been subsidized by the rest of the world. But even in America, it's not the 90% that are getting the subsidy and the benefit. It's just the rich. So the rich are printing money like never before. Here you can see that wealth gap beautifully visually represented here with the top two deciles there and then the rest down the bottom. Jamie Dimon. So yeah, in a world where we had a year where we had a global pandemic and everyone was hurting, massive recession, Jamie Dimon's reeled in 31 million. Citadel, these trading desks, they make money either way, collecting fees. I think I read as well another day, was it Goldman Sachs had a record year. All these banks, record profits. Amazing stuff. Here we can see the rally compared to other years. So this is the green line. It's now the longest on record, and it's up there with the sharpest as well. Valuations by region. You see the US at the top there. Far and away the most highly valued stocks. All the shorters, they've all been burnt. So short interest continues to plummet. Now this is in terms of the percentage of the market cap of the S&P 500, so the index. So not individual stocks, because we do see some funny things going on with individual stocks. This is the short squeeze. So this is the 50 highest short interest names in the Russell 3000. And hasn't that absolutely exploded higher? So here's some examples of what this sort of leads to. Tesla's market cap is now roughly equal to all the oil sector. All the majors, the drillers, the explorers, the refiners, services. Okay, Tesla, the one company, is bigger than the entire S&P 500 oil sector because they've had a huge short interest on the stock, and all those shorts have to cover. We see these Robin Hood traders that come in and they play these games. It's so easy to borrow on margin debt, so margin debt has absolutely soared as well. This is all just setting up in a nasty place, but here's a great example and story I want to share with you. So this is Gamestop. This has gone from under $5 at the start of last year. Where are we? Yep, the start of last year, or even, second half of 2020, we're still under $5. It's touched 73 today. So that's 2,000% in, let's call it 6 months. But what's going on here? So this is all part of the frenzy of these Reddit clans that call themselves the... what is it? It'll come to me, you guys. The name escapes me. Wall Street Bets. So what these guys do, basically, look at these different stocks. They pick one that they're almost going to pump, but what they look for is that short interest. And there was a big short interest on GameStop. And once they all start buying, they know that the brokers on the other side of that trade have got to actually start buying stock to hedge their trade in case they're wrong. They just have to do it. It's part of the kind of process. And so all of a sudden you've got so many of these Wall Street Bets, these Redditors, these Robin Hood traders that are buying all these calls, that you've got a huge amount of actual stock being bought by these brokers. Now, at the same time, the insiders, management and that, they're using all this to sell. So insiders are selling, Robinhooders are pumping and dumping, brokers are being part of the pump because they've, kind of got to do it. And guess what? The Big Short, Michael Burry, he called all this 2 years ago, 18 months ago, back in August 2019. So that is a pump, and I think regulators are going to have to look into this because they can't just keep pumping and dumping stocks like that and moving markets. It's insane. So junk bonds at a record low yield. Why? Because there's just not many buyers, like we spoke about before. There's more attractive options or better risk to reward. That is the way the market is viewing it. So the junk bonds have got to offer a better yield in that risk to reward comparison is probably the best way to think about it. But at the moment, there's other risky things that investors believe are going to give a better return. So this is what you might have heard, these SPACs, where they just write these blank checks. So special purpose acquisition companies. And it bypasses all the traditional IPO rules and regulations. So you're actually kind of allowed to shill your company to do this. And investors, wealthy investors, high net worths, they're just writing these checks and saying, hey, the sea turtle strategy, for those of you that watch Silicon Valley, they just want to invest in hundreds of tiny companies and hope that one does 1,000x and that they'll make up for all the losers. Very similar to, I guess, crypto altcoin investing. But here we can see the big four have taken 80% of the $42 billion net flows into ETFs so far this year. So this is, ARK Invest is one of these big ones that has a lot of these speculative plays in them. So there's now an ETF for SPACs as well. There's an ETF for everything these days. But ARK might be too popular for their own good, a victim of their own success. And a lot of the time, these ETFs don't even have enough stock to buy. When there's too much money that piles into the ETF's got to buy the underlying. Some of these things are so small, there's not even enough companies to invest in to give the money to. And that's where we start to see crazy fraud really happening. So they're kind of like penny stocks as well, but this is the side effect. This is probably a stage or two later. But this is just, penny stock volume exploding. So this is that other end of the spectrum, tiny micro cap plays. We're now seeing fake photos. So this is one of the companies that's trying to raise money. They just take a photo of a rocket and doctor it and say that they're, doing this technology for rockets and whatever. People are throwing money at them. This is the insanity. This is what markets are pricing in at the moment. No profits, no problem. So this is now another basket of companies that don't make money, and it's past $1 trillion. So remember all those companies that are zombies that can't service their debt, and now we've got these startups which aren't making any money that are worth $1 trillion. We're seeing a lot of fraud start to be exposed, and it won't really all come out until the downturn. You can keep faking the numbers and accounting at the moment while everything's going up, but hey, is the bubble going to get bigger? Everyone put their $600 paychecks into stocks and Robinhood and crypto. Well, now there's a $1,400 check on the way. And if America's just had another big uptick in to the jobless rate, maybe we're going to see more and more of this. Does it end in universal basic income where people are putting their paycheck into ETFs every week? It's kind of how crazy this all is. So buybacks have come back in a fever pitch. Corporate insiders, hey, guess what? They've started selling. Now they're allowed to buy back their stock to pump the price. And Biden's got a once-in-a-century chance to fix capitalism, particularly Wall Street. Look, I don't think he'll do it. I don't think anyone can really do it. It's they're too big and powerful. But getting up there towards 1 million again in terms of first-time jobless benefits last week, so it's not a rosy picture there. I've already mentioned the company selling stock. I did want to mention the curb away from US oil industry towards the renewables. It's kind of already been happening. Again, the money hose is out. There's plenty of money being pointed at all this renewable stuff. The funny thing is, if we don't fund all the oil and gas, it'll actually get probably really expensive at the time that we realize we still need oil in many parts of the economy. So yes, there's a big risk of inflation when we start spending more and more from the government and giving people paychecks instead of it just going from the banks, to Wall Street. But that's where we've got to tiptoe and be careful. So the US economy may well overheat. These households have just been flooded with savings, personal savings. This is just from the free government money. But homes and sale prices have started to accelerate. We saw in Australia at the start of the episode where they're talking about 30% rise in house prices in 3 years. The cost of shipping goods from China to Europe has more than tripled in the past 8 weeks. There's a shortage of containers. We've seen China importing massive amounts of food. The price of food's going up everywhere. So, it's not a coincidence. It's all connected basically to the amount of money that gets printed. And isn't this echoes of 2000 here in terms of this chart pattern on the NASDAQ and Russell? So markets are basically convinced themselves now that the Fed won't come for the punch bowl. They're just going to keep the party going. I don't even want to think about what happens if interest rates continue to rise. That is going to be the biggest tantrum of all time. Whether you think so or not, a lot of these investors have never been through a downturn. So, hey, Ray Dalio's warning about this, verge of civil war. Look what happened the other day in the US. Is it really that big of a stretch to think that things are going to get worse when unemployment goes up and cost of living's through the roof and they can't afford it? This is where I think gold is still going to have a tremendous run over the next few years, because Bitcoin, when Bitcoin goes from 4,000 to 40,000 and you're a huge hedge fund needing to protect $500 billion, you're not going to put it into Bitcoin, guys. So this is the perfect case for gold and where the next chapter of that bull market comes from. So into the crypto news, guys, just remember, if you are busy these days, we've got all our daily snapshots and headline analysis. So you never fall behind on everything that's happening, for those of you that like reading as well. Aussie Bitcoin exchanges are still being debanked. It's crazy to think that this is happening and nothing's being done about it. And speaking of Aussies, Craig Wright is going for copyright on the Bitcoin white paper. So look, never a dull moment for him. I think he's run out of things to try and say about Bitcoin having fatal bugs that he's going to reveal by 2018, 2019. So now he's going for copyright of the white paper. Janet Yellen's been very busy creating this false narrative around Bitcoin's role in illicit use. But remember, the central banks are all out there building these platforms, and she is well funded, as I showed in the other night's video, by all these banks with all their speaking fees. So don't listen to what she says too closely. I am glad that President Biden's frozen a lot of these proposed rule changes. So that included those crypto wallet regulations. That's a big win for us. And Nebraska, they're looking to introduce bills for state banks to custody crypto. So yes, that is all a step in the right direction for what could have been pretty bad. Janet Yellen and Christine Lagarde, they've been talking about terrorism as well. So it's all these things that are going to keep banging that drum, but just shut them down. This is the latest study from Chainalysis showing that all that, that naughty, that bad stuff, it all fell sharply in 2020. Canadian Prime Minister names Bitcoin as a possible reserve currency. I can't wait to see whatever country it is start to announce that they're buying Bitcoin, and no one's going to want to be last when that happens, remember. And in China, we've got one of the Hobby execs is actually in prison, did I read? In custody at least. So there's always China bans Bitcoin at least once a year, and we appear to have got it early in 2021. Nothing to worry about though. We've got Russian banks looking to launch their own stable coin, Tether, which is widely used in China, Russia, and to get around a lot of the capital controls. They've come out and said that their reserves are fully backed. So there's nothing like saying it when you still haven't got an audit, but I'm going to have the team on the channel this week. And Tether and Bitfinex have sought a 30 days extension because I just don't think they're going to actually cough up all these documents that keep being demanded by the NYAG. Now, Tether's actually more widely used on Tron for Ethereum for the first time because the fees are it's actually free, I think, on Tron. So if you're ever sending from one exchange to another, you want to send Tether, and it says, do you want to send it on Ethereum or Tron? Send it on Tron, and it's it's free, and then you just turn it back into Ethereum or whatever coin you want when it goes to another exchange. So that's why you might have seen Tether having multiple different options for the addresses you can send it to. Dan Laramie has disappointed and he has departed. So this will be the third project he's left. This is one of the reasons that I didn't like EOS. And they've got a war chest, and I think the community have begun demanding them to do something because they're sitting on $5 billion of Bitcoin. We've got a former Real Madrid striker, the first ever footballer, bought with Bitcoin. So this whole crossover between the sports world and the digital world, and games and trade and whatnot, I think crypto is infiltrating that area very quickly. Enjin's the first gaming token approved in Japan. They've got very strict regulations, so it's great to see that they've been approved there. And Enjin, one of our favorites that had a big jump. We've got an ultra rare cypherpunk, CryptoPunk, selling for $750,000. So there's crazy money being made in this space, and Maddie and I will talk all about those in our next monthly episode. Don't forget to check out that Gods Unchained interview we did with Robbie this week if you didn't hear me mention that at the start of the episode. And Cometh is another one that's using an optimism style scaling solution. So maybe DeFi and NFTs are going to lead the charge in terms of scaling rather than the traditional projects, which is awesome. We're not complaining there. Aave are using Matic Network as well. So this is Avagotchi project that's building on top of Aave. And they're using the Matic Network to create a bridge as well. So more and more scaling solutions and complements. This is the top 8 projects in the NFT space, and I think we've covered all these in detail for you. Maybe not UOS there, which is Ultra. I haven't touched on that one too much. But yeah, we'll talk about all these, as you guys know, very regularly, the hottest gaming projects. Polkadot, this is something where I have been bullish on this, guys. We did a big write-up and research report on Polkadot back in July last year when I think it was $1. So you could have done very well out of that one now. I think it's trading close to $20. And in the Altcoin Daily interview, I said, don't overcomplicate things. Just buy the top 10 projects on Polkadot by market cap. And we're so early that they're probably going to do pretty well. Kasuma is the testnet, the sister chain of Polkadot. That's been going very well lately as well. And the bidding's about to start for the parachain slots. So that is going to be a big deal as well. Probably start the next leg up if we're in a bull market for Polkadot. Melon's rebranded as Enzyme and launched V2, a project that I'll probably dive into more. Almost building like decentralized hedge funds and investment strategies. I love that one. Brave's integrated IPFS. So this is the file system. Obviously, we want more and more of the layers of the stack. This is D-Web, Web3 that I always talk about. More of those layers to be decentralized. Jack Dorsey's talking about helping build a decentralized Twitter. We don't quite have that yet. We need more and more scaling, but hey, we definitely need decentralized social media. Grayscale has unveiled another, I think it was 5 trusts. Whatever coins are getting these trusts are going to do well. Think about Litecoin, how much that's been booming because it's got a Grayscale trust. So very, very good news. A lot of happy Link holders out there. And Link's hit another record high, I think today, $25. SushiSwap, they have been killing it lately. The one that I copped a lot of heat for supporting. More partnerships out there. Plenty of cool user products on the way. And DEXs are just doing these crazy volumes. $1 billion a day for Uniswap. The Uniswap founder doesn't know what to do with all this money. So he's got $500 million. I think you're going to see more grants and airdrops and funding like Gitcoin. 0x, so another liquidity aggregator. They've gone from $2 to $3 billion in 17 days. So this is all kind of little signs of alt season heating up, guys, when this sort of volume is going through DEXs. No wonder Kyber's planning to make a bit more of a pivot and go aggressively into the DEX space. That'll be good for their token as well, one of our favorites. Saddles raised $4 million. This is a kind of knockoff of Curve, I believe, a VC-backed one. So a little bit controversial. We might talk about the full story with Anthony, our monthly Ethereum update. We've got plenty of mining pools threatening to collude against Ethereum. So this is all about cutting out that those fees. So miners are going to make a little bit less money because we've got the fee burn, base fee burn, and I don't think we're going to lead to a split. I don't think we're going to have Ethereum Classic. But remember I said months or even years ago that when Ethereum comes to this point to make the transition, miners are going to make less money or eventually not be used at all. They're going to make a song and a dance and try and get attention and try and cause a chain split. So maybe that's where Ethereum Classic comes into it. They've got a Grayscale trust. I'm looking for Barry Silbert to start tweeting about Ethereum Classic and miners and drive the price of Ethereum Classic up. All right, so we've got some big players now talking about $10,000 Ethereum. Look, I probably undershot when I spoke about 2,000. I'd rather undershoot, but to be honest, guys, I am that bullish about where we're going now that I'm quite happy to say I think ETH is going to hit $10,000. Probably within the next 5 years for all those reasons I've drummed into you many, many times. Scaling. So the OK coin have integrated the Lightning Network. I know Bitfinex have got it. Not too many other exchanges, but that's very good news. So you can deposit like $1,000 through Lightning Network for those instant deposits and cheap rather than waiting for the block confirmations. Samsung are discussing a $10 billion chip making factory in Texas. So this is decentralizing that industry that used to be dominated in China. Bitcoin node count hits a new all-time high. Network becoming more decentralized. I just love it. Hive blockchain are purchasing more rigs, so that hash rate is being spread out rather than being concentrated in China. And we did see a lot of FUD this week in the mining community. Mainstream media picked up on this and said that there was a double spend and that Bitcoin was broken, but long story short, it was all crap. Bitcoin functioned as it was meant to, and everything was better on the next block 10 minutes later. So Grayscale added 18 times the mined supply of Bitcoin in one day. That's how much that they are now soaking up. Think about PayPal as well, Square, the institutions getting on board. We've got more and more of these investment products from different countries around the world. They're going to start market making these. It's all coming very professional. And this is the big kicker. So not only did Michael Saylor, MicroStrategy buy another $10 million of Bitcoin on the dip recently, I think just so he could tweet about it, but they're holding this huge conference with thousands of execs. They're giving them the playbook of how to legally buy Bitcoin, how to do it from a practical standpoint, how do you buy millions or billions of dollars of Bitcoin. And they're giving that out for free to save them all the thousands of dollars that they spent on lawyers and whatnot. So this is going to happen, I think, in a week or two. Hey, it's probably an event that's going to be front run, I reckon, and going to take Bitcoin towards $40,000, $50,000. BlackRock is giving two funds the AOK to invest in Bitcoin futures. So I prefer that they're buying real Bitcoin, but either way, I think just the name association is probably a positive there. eToro are finding that pension funds and endowments are finally waking up to crypto. Yeah, we knew that they were coming. And Bitcoin and Ethereum massively outperformed most of these crypto hedge funds in 2020. So my advice has always been since day one, Bitcoin, Ethereum, big percentage, altcoins, small percentage, they're high risk, okay? The turtle strategy, not all those turtles make it to the sea, but the ones that do, survive, thrive, last the test of time. So that's the way venture capital investing should be thought about. Coinbase have revealed they've got 43 million users and growth is starting to accelerate. So good for alt season. I know what noobs are going to do when they log on to Coinbase and they see that Bitcoin's 50,000 or there's an altcoin that's, a few dollars a lot cheaper. They're going to buy those altcoins. Last week we did see whales start to deposit for the first time in a fair while onto exchanges. Now, institutional interest was enough to absorb that a little bit when we saw it back in December. But that did lead to a pretty sharp pullback here. So funding rates had got crazy high. very, very expensive with everyone betting it was going to go up. I posted for members that we need a sharp pullback for all those numbers to reset to get out of those leverage longs. That's exactly what happened in 24 or 48 hours. And we saw that the liquid supply that came off those exchanges is the biggest we've ever seen. So, ETH, same thing. This huge candle that you see here, 660,000 ETH in 1 hour, left the exchanges. That means someone bought the dip. So whales continue to accumulate. Jim Cramer's telling Powerball winners to put 5% in Bitcoin on mainstream media. Risk-adjusted returns are now speaking for themselves. The Bitcoin is a must-have in a portfolio. And to wrap it all up, whales bought back everything they sold, or 92%, within 24 hours. So retail probably panic when they see that whales are selling, and then they go and panic and they sell to the whales. And then the next day they read that the whales have bought back. And what happens? Exactly as I put in that write-up for members, they're forced to chase the market higher. So let's have a look at the markets here. I did want to mention the DeFi index to begin with, because this is one of the, on FTX where I trade, they've got these indexes. And when people start saying, oh, DeFi, I want exposure to DeFi. Now, the more advanced users out there can use the DeFi index products in the world of DeFi. But this is an actual DeFi index. Very easy to use. So double discount on fees, link down below for FTX. I think this is going to be the most popular way for people to get exposure to DeFi. Bitcoin, here's this sharp throwback you can see here. But I think that this is pretty much looking like a bull flag now. And we've probably got the all clear to head on back to the races. A little bit high volume. I don't like this candle here. But overall, maybe Ethereum, which is a lot greener here, a lot better setup, maybe ETH has the power to drive the market higher. And just as we speak here, ETH's broken out of this very important ratio, the 0.4 mark, and ETH appears to be powering higher. So guys, I better wrap it up there. Head over to nuggetsnews.com.au, head over to Collective Shift for all our resources. Don't forget, friends and family getting into crypto, send them our way. That's what we've spent years doing, the team and I. We'd love to have you in our community. I'll talk to you next time. Cheers, guys.